So happy New Year 2025. Welcome to McBoss Capital channel. This is Michael Chu. Today I want to spend a little time just doing some post analysis of my last year's trade. Some of the things that I've learned and I'd like to share it. And hopefully we can learn from this and or at least I can learn from it so that I can remember to not make those mistakes again this year. Today is January 3rd, 2025 in the late night. And yeah, I usually have videos out on the weekend with a market recap video as well as growth stocks that I follow. So if you like this and subscribe, you will get notifications on when those videos will come out. So thank you for watching this. So before I go on, I think 2024 has been a really good year, and I hope that most people did make some money from trading in the stock market. And I would say the first thing we want to learn to do is not to give back your gains. One of the things that I've done a lot in the past over and over again is especially when you have good gains, you constantly get into this mode where you want to chase. And the higher it goes, the more you want to chase. And that usually means that you're taking more risks and also being more aggressive, which is kind of the opposite of what I think one should do. Usually at the beginning of the rally, you want to be able to make a good decision, like, when it breaks out or when it breaks a trend line above a trend line. And that's when you usually want to take that risk because the reward usually is at the highest, because if it comes out from those from positive to negative type of environment, meaning like it's in the uptrend, or it started an uptrend, even though you don't really know for sure that it's going to be a sustainable uptrend, but the risk you're taking is much lower because your recent support level will be very close to where it is right now. Whereas when the stock is really extended, they are well above their moving averages. And so even if it kind of, pause for a little bit and breaks out again to new high, there's still a lot of risk because it's getting further and further away from its moving averages. Doesn't mean it couldn't keep going. I'm just saying there's a lot more risk in that sense when you're starting a new position. If you're in that stock, then yeah, adding some position or more position is probably okay because you have a sustainable gain from previous. But for example, we have a rally started from August 5th low to recently, um, and some stocks have taken a break since mid-December. And so if you count, that's roughly like over 4.5 months, and that's a really good rally. And like I said, if you have caught on early or even partway through that rally, like in, let's say even in October, early October, you have a really good gain. So in those cases, if there's a stock that are still running and you bought into it recently, it's probably okay because you have such a big gain. So, but again, we want to be careful two things, right? Like here that I'm talking about is one is, if you have a gain, you don't want to give back too much because it's not easy to find those stocks that have good gains. And if you did have those gain stocks, that means you have good gains, and we'll talk about some of those. And you don't really want to give it back. Is what I'm trying to say. Like one of my goals every year is very simple. I like to make two like I would like to be able to make profit on two rallies. If the year have two rallies, like even if it's a short 2 month rally, and if there's two of those, I would like to make like close to 20% each on my portfolio. That's not easy thing to do. I mean, especially across the whole portfolio. I'm not talking about one stock or two stocks. For those of you who watch my videos, you know that I'm more diversified, so which means it's even harder. So sometimes I do have to be very aggressive and position into like certain stocks in order to make more gains. But yeah, making 20% across the whole portfolio on more diversified stocks is quite hard to do. So yeah, given that that is my goal, I don't want to give back too much. So if you make 20% and then you give back, let's say even half of that, like 10%, now you're only up 10%. So and if you have a monster stock, like one of your stocks like make 100% and you give back like 50% or more, now it's really gonna hurt your portfolio, especially if that's not especially if that position is quite big too. So I like like I said, sometimes it's almost like better not to chase all the time. So you need to give yourself a break. So that's something I'm trying to do better. And after a rally, if there's no good setup, and that's the next related thing is to have good setups instead of chasing stocks that you have missed. Wait for the next setup. There's always going to be stocks that are setting up, and even in the worst market, there's always some stocks that are kind of against the environment, like the negative environment, and start to move up. And there's also stocks that have corrected earlier, and they will start to bounce, as the market go. But yeah, in general, yes, you want to follow the market trend. But sometimes there are stocks that gonna not follow the market trend, and those ones could be also profitable. So yeah, in short, like just a quick one more thing about this. I know, like I said, since mid-December, a lot of stocks have started to pull back, and until actually as even the last day of the year, December 31st, we were still pulling back. In most cases, we saw really poor breadth in the market, so a lot of stocks are just heading down and looking at the advanced decline line and so forth. But then we have yesterday and today, which is January 2nd and 3rd, we saw a lot of stocks start to bounce back. So this is so far looks good, but again, we don't know for sure whether this rally will restart and resume, and then go on to new highs, right? We don't know for sure. Who knows? Next week, when more investors are back to their office, we may see a hit to the market. So again, we don't know. Like again, we don't want to chase, and that's something I have to do better because I tend to give back a lot of gains after each rally. Because again, that's because we are always trying to be more aggressive and making higher, even like buying at higher prices when it's actually more risk than reward. So just remember that, and being patient for setups has always um, do me better. And so let's remember that. So the next item here is two stocks that I got into very early in the rally, but then I took the gains and I didn't really get back in. Um, I believe this is a mistake because obviously these two stocks have done really well. So what I'm trying to say is, we need to keep monitoring the stocks even after you sell it, because especially if those stocks have give you really good gains, and at that moment you may think that this, how can it keep going higher? I actually make a video on this, and and I say, how much higher can it go? Of course, they pull back, but then they bounce and make new high and continue to make new highs. And so when you start monitoring them, or you hesitant to even want to look at it because you feel like, oh, I saw it, I just want to move on. But that's not how most leaders work. They will keep going up and up and up. So what I'm trying to say is, you don't want to catch a leader and not make most of the gains, right? So when you do catch a leader, and when you have those gains, it's okay to sell if you think like it's really extended, or you can trade in and trade back in, but don't keep your eye off it, right? And I'm trying to find out what's the best way to do that. Because what happens is when I sell something, it goes off my portfolio and I don't see it no more, right? Because I have other stocks, but then this stock is no longer there. So how can I keep monitoring this stock, right? And I either I have to track it somewhere, or I need to like buy like one share just to keep it in my portfolio, to keep monitoring it every day, because every day I have I go through my portfolio once or twice usually, at least, just to look at the chart and make sure they're doing okay and so forth. So by having it still in my portfolio, even if I buy one share or whatever, just so it's there, it just keeps me watching those stocks, right? Now, of course, you're not talking about every single stock, right? Like only the stocks that are, you felt like have give you good gains, and obviously they may be extended and they're gonna pull back, and just have it in whatever way you want to do it, right? The other way is to obviously use like tools like Marketsurge to draw trend lines, and wherever you think, oh, once it comes back above this level, it will trigger an alert. But the only problem with that is, if you have lots of alerts, you're gonna miss it, right? So again, there's no perfect way of doing it. Whatever is the best way to do that. So for me, I'm gonna have to do it both ways. I'm gonna have to buy a share or something in my portfolio so that I'm watching it. So I keep it there. Um, uh, because I have lots of stocks on my watch list, so I can having it on my watch list doesn't help because there's just over hundreds of stocks, and I can't watch that every single day. But if I have it in my portfolio, I can monitor that because it's not as many. So at least I can monitor it. And then I will still have the alert line in Marketsurge so that when it does cross, at least I get an alert. Again, usually I get a lot of alerts, so I could miss it as well. It's too many to follow. So here's the app loading chart. I just want to show this quickly because so I think the August low is around there, and you can see this nice really long flat breakout right here, and I think I started buying even earlier right there. It's really flat now. You can't see it. Like I will have to go back to those dates to see it better. Let me try that. So here's the original August 5th low right here, and then as it start to move up even before. So here's the probably where the downtrend line is, and then it breaks above it, and you can see I start accumulating shares on the green triangle, and then I had to sell some here because it was kind of coming back down. And then here I got back in more shares here. And then as it moves up, I start taking profit here, thinking that this is quite extended now. But you can see how it never really gave up much. And I talked about that a lot in my video all the time, which is, watch how it reacts around the 10-day. In this case, it didn't even touch it. Let's fast forward. So that was right here when we were just showing, and you can see it continued to climb, and finally it came down to the 10-day around here. So again, there's lots of chances to get back in, which I didn't. So this is one, and then there's a pullback right here. This is another one when it bounced. So there's at least three chances, and this was the big one. This was where, yeah, this was the big move right here, and then it keeps going, and you can see it continue to find 10-day support right here, and then it finally topped after like a 6-7 day run really quick, right? From 340 to 417. That's usually a sign of although you could say same thing happened here, but like I said, when it goes up, watch how it reacts as it pulls back. And this one went sideways, whereas this one just crashed, right? You can see that right here. So this is where we're at right now. Again, I'm not saying app living can continue its run right here. I'm just saying, hey, let's learn from the past, and when, like I said, when this stock broke out really early, I was on it and I had a good gain, but I gave up too easily, and and then I move on to other stocks, right? And because so many other stocks are moving too, so they caught your attention. But really, I should have continued to stick with this stock because this was the one of the stocks that make really fast gains at the beginning, and I just didn't continue. And then I start to hesitate, right? As I see even with the bounce. And so this was a huge mistake in my part to not continue on with an early leader, right? And like I said, the leaders. This is something that IBD has found from their research is that leaders tend to break out the fastest during a rally, because during the last correction, like wherever the last August correction there is, usually the stocks that bounce back the first after correction or pullback, those are the ones that tend to lead the next rally. Like not every case, but most of the time. So in this case, it was one that broke out only, and like I said, had a huge fast gain, and I took it, which is nothing wrong with that. Taking gains, nothing wrong with that. And if you feel like it's extended, sell it. A lot of traders do that, but just make sure you keep monitoring those stocks because they're going to be the leader, and I miss out on big gains. I don't like if I look at this number here, I probably sold around 140, 135, something like that, and look at how far it went in such a short time. I mean, this was from like September sometime, mid-September, and early December, it went up another almost threefold. So it just it frustrated me a lot. So that's why I want to talk about this because I need to learn from this, yeah. So I obviously another stock that after seeing this and I didn't let go, was TWLO, right? TWLO, I missed the early breakout, but then I caught this one right here after a gap up on the earnings, and I tried to carry on as far as I could go. So you can see it goes up really fast here, and it took some gains here, took some initial gain here, and then you can see right here as it pulled back, I bought more. And then as right here, this is another one. It pulled back right here, didn't touch the 10-day, I bought more, and finally it stopped working right here, and I had to sell. Like this is like right here, there's quite a bit sell. Like even this one, I tried to buy back on this bounce right here, but like I said, it just didn't work this time. So right now, again, I'm not talking about the current situation. I'm just talking about post analysis of what happened. And this one, I was able to capture most of the gains. This one right here is Palantir. Again, huge gains. Really sad that I didn't hold on to this. Same problem as app growing. Because this two stock came out so early that other stocks got my attention when they were pulling back, and I didn't continue like you know watching them closely, and I got hesitant at those moments because I was already on other stocks. But these two stocks actually end up giving the most gains, compared to many of my other stocks. That's why I'm talking about this right now. So here is the August break right here, really sharp break. And as it bounced, you can see I start accumulating the shares right here. And and then we saw some pullback right here, and I had to sell some. And then right here, I continue to buy on this bounce right here. Um, and then as it goes up higher again, I start to let go some shares. And this right here was where it touched the 10-day, and it did close slightly below the 10-day. That's why this is probably where I sold it. But it bounces right away the next 2 days. You can see it actually fall through. And unfortunately, this is where I let go, and I hesitant to buy it back. So when you have a strong leader, when you see this kind of action, and if you trade like I do, because one of the things that I do is I don't like to hold stocks for long term. Um, I'm a momentum trader. If I see momentum go one way, I have to follow that momentum. The problem with that strategy is that when the momentum goes the other way, you sell it, and then you lose that. Again, you're not watching it no more, or you're watching other stocks and you forget to watch this, or you even hesitant like I did. I actually was watching this, but I hesitant to get back in, even though there was clear signal to buy back in. There might be other reasons. Maybe I'm already moving my money to another stock. I can't remember exactly, but I did hesitant because even though I knew this stock was the leader at that time. So this is again really flat here, really hard to see. So this is where I was trading right here, and I think that was it. I didn't get too much gain out of this. I gave I hesitant to buy back in here. You can see it give a lot of chance. It's not always. Sometimes on hindsight it looks easy, but if you go back and study the chart, sometimes there is pullbacks that are not easy. Look at this one. They actually, I think, undercut this one too. So you could have shaken out here as well. But here's the bounce right here. This is the probably gap up on earnings. Could have bought it there, but I didn't. So there's chances to buy it back. And then after that gap up, it seems to be running smoothly because you can see it never touched 10-day here. This was the first break right here, and then look at that reversal, right? Now this is more closer to the end, right? Whereas here I was too early to get to not come back to this stock. But obviously you see the huge miss. So this one, um, I got out around 37 here, so it went up to 80. So it's not as bad as app. App probably I miss out big time. As I said, that's another 200%. It could have gone up, whereas this one is closer to 100, a little bit over 100%. So these are the two biggest mistakes this year I made, especially in the last few months. That I missed was Tesla, and the only reason I was watching this so closely, I was paying attention to the election, and this stock really fly after the election, and I was on it watching it so closely, but I hesitate to trigger it. And the reason was it didn't meet my 10% forward earnings criteria. So if I jump to the chart right here, so this is the problem right here. So 71 cents this quarter, December quarter earnings, and 76 cents forecast, and it was 7%. It missed my criteria by just a few percent. So what I like to see is at least 10% growth in the next 4 quarters. That's usually my guide, right? And I was so strict on it. And even though I know Tesla was going to move, I still didn't buy it because I want to stay true to my criteria. And the thing that I learned from this is that, it's okay to stay strict to your criteria. And but there was a couple of fundamental things that I really like about Tesla after, like, recently, which is, the demo right before the election was really good. Their self-driving vehicle, and also their robotics also getting better. So I know, yes, those are longer term things, but still, like, I really like what they show. But anyhow, that has nothing to do with the numbers. The numbers right here, and but I was so strict. Like, you can see the quarterly earnings are really moving up the next 3 quarters, like 63%, 65%, and 25%. I think these numbers are right, but sometimes Marketsurge have it wrong. I don't know why, but this one looks correct. And so you can see it went from like single digit to like double digit and even like past 50%. So sometimes I need to be less strict in cases like that, especially when the numbers are improving, right? It's different if the numbers are coming down in the future, but in this case, it's actually going up and getting better. And I remember situations like Netflix back then, right? When they wasn't making money, it was same situation, but they were improving their numbers. And so sometimes you just have to be less strict on stocks like that, because when they're growing, um, they're gonna go through, some you know like problem, right? Like hurdles and stuff. And I still want to stay true to that criteria. I really believe that criteria is important. But I think sometimes you have to look at it case by case. And the reason why this is so important, because this is the breakout right here, and in less than, like, I think 8 weeks, right, it moved up significantly. You can see here roughly the breakout is around 260 level, and it jumped to like obviously as high as 488. But even if you didn't make the whole gain, that's a really good gain. Like, I don't know, 60% or more to 80%. I think it went as high as 90%. But that's a really good gain in such a short time. So, and this is a really nice pattern here. Let me go to daily chart. So here you go. This is the breakout. So this breakout right here, this volume was drying up right here, and then the volume comes in right here. And this November 6th, yeah, this happens on the election day. So not to talk about politics, but obviously I know Musk will get influence after the election win with Trump, because they're really close. So that's why I saw, there's obviously some momentum there. But again, because of the numbers, I didn't get into the stock. And after that trade, you can see it went up and it pulled back to 10 day. Look at how powerful it is. It just doesn't want to go below it. And this one, it did close slightly below it, so it could have get shaken out here, because I do follow the 10 day quite closely. But again, here it started to bounce again. You could have bought it back here, and then you can see it has another run rate. So one of the things that happen as a trader a lot is your emotions will kick in. That happens when, say, you want to buy, but you're not sure you want to buy because maybe there's lots of fear in the marketplace. This happens quite a lot. Um, and especially, sometimes you follow certain stocks and you see it breaks out, or you see that it broke above a trend line, especially a downward trend line. And you're like, oh, this, it hasn't done that for 2 months. It finally broke above that trend line. You should buy. But then you fear because you're hesitant. You saw the market just pull back, like recently, in mid-December to end of December. You're like, oh, everything has pulled back. And then Thursday and Friday it bounced back, and you saw some of these stocks move back above the trend line, and you're like, oh, um, I don't know if I should buy it. Now, what I've learned, and I want to get better at this, is that if you buy at those moments on those break above the trend line, you actually have lower risk. And the reason why is, if you wait a few more days and the stocks was going up 4 or 5 days from the bottom after a pullback, they might be quite far away now from those moving average, like the short-term 10-day, which I follow quite closely. And when they're a little bit more extended, now if you buy on those days, because now it's either more obvious that this is now a true bounce, you're actually buying near the top of that, you know, the high of that pullback, wherever it was before it pulled back. And that gives you lot more risk, because it could easily come back down to the moving average again. But if you buy within, let's say break above the trend line and you buy within 1 or 2 days, doesn't mean it'll succeed. I'm just saying that the risk is actually lower because you're much closer to that low. And I usually set my stop or have my exit point near that low of the recent low, right? And so if the further away you are, the now again, assuming you want to set your stop or have your exit point near, the recent low, well, you're getting further and further away. So now your stop is getting bigger and bigger, right? Usually within 1 or 2 days, you are within 3, 2, 3, 4%, maybe sometimes 5%. It depends how fast it's moving. But if you are 4 or 5 days into a bounce, well, you might be up more than 5% easily, like maybe even 10% in those cases. So you're actually taking more risks, and because it could fall back pretty easy. And if it fell, if if it wasn't going to turn around and fell, like it could fell below that recent low, and you could be down much more. So that's something I want to get better at, is don't trade with fear, but trade with like risk management, right? Manage your risk, and the lower your risk, the better, and the higher your reward, the better, right? So that's why I don't hesitate, try not to hesitate to buy um, when they're low, because sometimes that actually it works out better, right? Because of the risk reward. Now, of course, there's more chances of failure because they're really at the bottom of their base. But that also, but again, you have to kind of be good at, kind of looking at how many stocks are doing that. The more stocks are doing that, the higher, it's like if the market breadth improve and more stocks are actually, bouncing from the bottom, then the chance of that is higher, right? It's not just that one stock doing it. Like there's a lot of momentum in the stock market, and investors are piling back into those stocks, right? Again, this is just a more early entry point I'm talking about. It is possible that it'll fail, but um, uh, make sure you guys follow the growth stocks list. I'm going to talk about a lot of stocks I bought on Thursday and Friday. Again, I have no idea whether they'll work or not. But when they do work, at least your risk. If they fail, I'm saying if they fail, at least my risk is much lower because my stop is not that far away. Um, so so I think this is important. I think as a momentum trader, I feel like I need to get better at this because, let's say, if I lose little, but then my reward is still pretty high, then the chance of me making money is higher, right? And if it doesn't work, like I said, then right? Like right away, it doesn't work, and then you obviously don't want to continue buying more stocks breaking above the trend line. But like I said, it has to be kind of looked at upon as a whole rather than each individual stock. But with that being said, my next point is follow your stock closely rather than an index. Over the years, I followed the index more than my stocks, and I found that it's not as good, especially if you're a momentum trader, because the reason why is sometimes it doesn't always correlate, right? Um, Now, in most cases, it does. Like I think 60, 70% of the time, or even 80% of the time, when the market move up, your stock should move up. The market goes down, your stock probably go down. But when you have a strong momentum stock, those stocks are the strongest momentum for a reason. It's because they usually don't follow the market. So when you have a down day on the market and the stock goes up, that's actually a very good thing. And so just because the index is falling and you're like, oh no, the market might go into a correction mode. Well, your stock is still acting normal or even better, or relative strength is actually not going down. Then you shouldn't follow the market, right? So again, I try to follow the market as a whole rather than just looking at the index. So meaning like I look at many stocks, especially growth stocks, and if many of those growth stocks are doing the same thing, then that gives me a good um, insight into what's really happening, rather than just looking at the index itself, right? The index falling 1% today doesn't mean a thing if most of those growth stocks didn't fall that much. Most of the things that I feel like I can continue to improve, and hopefully I can have this near my site every day so I remember this for this year. Um, and hopefully I want to also get better at writing down any mistakes that I make right away. Because when you don't write them down and you only think about it like a few days or 1 week or 2 months later, you forgot. And then you're gonna make the same mistake again. So for the last segment of this video, I do want to talk a bit about some of the good trades I did and just look at it once more and see, why I was able to capture the gains and did I execute it perfectly or even close to perfection. So let's start with AWI. So this one, I got in here after this bounce right here. This is my first entry point. It moves up, and one of the things that I've started doing as well, and this I need to write on that list as well, is when it breaks out and it get extended really fast. In this case, it did. Like it went up 2 3 days, and then on the second day at the top here, I already sold some just to lock in some initial profit. And this is something I've started doing more recently. And I learned it from Mark Minervini. I don't know if I'm doing it the same way he does it. He probably does it differently. I'm just doing it my own way. But anyhow, locking in some profit initially, when it's extended, in this case, only a few days after, helps me like not have to think about losses after, right? So if this stock comes back down, like all the way to my stop or wherever my stop is, at least I'm not losing much, right? Or I'm even. Um, and at the beginning of a breakout, that's very important because sometimes it takes a few tries before it actually take off. And so if you're able to lock in any gains early on, that will allow you to, let it run even with, taking a little bit more risk and not have your stop that close. So there's many things you could do after that. Now, the caveat to this is you lose some of your position because you're selling some, right? But you could always buy it back. In this case, you can see I bought it back right here on this pullback. Now, this level might be not the same level as this. Like maybe I'm buying it a little bit higher. In this case, because it went higher. In some cases, it actually came back down lower. So you don't know, right? But here I actually, bought it back, and then and at that moment, you can always choose to add more position than the position you sold as well. So that's also another good thing you can do. And then it finally top around here, and you can see I got out in, with the red mark. That's usually where I sell most of all my position by that time. And so in this case, I did pretty good on this trade here. As you see, most stocks do go to their 20-25% mark, and then from their initial breakout. And that's a general thing that most stocks do. There's always the really strong leaders that will go above and beyond that. Stock that I did well is GSHD, and you can see this is again a little bit late on the breakout movement here. Like it broke out around September, but it didn't really move until this gap up right here in October right here. And this was a gap up on earnings, and I bought onto that day. But after a couple of days, you can see it's a little bit extended from the green line, 10-day moving average, and then it starts to pull back. And here, as it bounced, I start to buy in, and then it pulled back right here. I bought in here, and then here's my first sell here, and then here's another. This is where I would exit. Generally, this I draw my stop line here, so that's where I exit. So overall, this one I did really well. Again, you can see obviously pulled back, corrected quite a bit after that. Business 5 serve, financial service stock. I missed most of this run at the beginning. It didn't really came on my radar until later. So this was the August low right here, and look how nice it ran. And then we have a nice pullback here to 21 day. This was my first entry on earnings gap, right? Reversal right here. It moved up a few days, but then it lose steam, and then sold here, bought back right here. As it moves up, here's a bounce, bought back here. Here's another buy here, but this one actually didn't work as it undercut right there on that low, and I got out. So right now it's been having a hard time coming back up. So this stock here, VST Vistra, which is part of the electricity power generation, a little bit of hype with the AI stuff. So this is the August correction right here, and then it starts to move. This is my first entry. Sold a little bit here. I think I got out right here somewhere, right here. Then it fell right here, and then here's another bounce, and then it didn't really move much this time. And then you can see where we at right now. We corrected recently, and we're seeing some bounce right now. Finance consumer loans here. It took this one a while to come out, and the first time it didn't work right here. And then it got back in right here. Took a little bit profit here as it extended. Then it pulls back, and I added here. And then right here is where it kind of starting to show some weakness, and I think I'm gonna stop right there. This ATGE, Andotelum Global Education. So this one also came out a little bit later in October, and on gap out on earnings, that's my first position there. As it kind of get a little bit extended, I took some, locked in some profit, and then as it pulls back, I tried to add more, and then here, see some bounce right here. I also add some, and then it kind of stopped working right there on this break right here. So right now it's starting to move again. This next one is FLS Flow Surf in the machinery industrial. So this was the gap up right here, first entry point, first position. Then it starts to move up right here. Took a little bit of profit right there. Then it starts to pull back, and here's my bounce, and I added more. And then here it bounced again, I added more. But then it started to break right here. So that's when I sell. So it hasn't quite recovered yet. It's still building a base here. So the next stock is SFM Sprouts Farmers Market. This one was kind of moving steadily. Even during the August pullback, it was doing really good here. But I got shaken out. A little bit choppy right here, right? And then it started to move, and I missed this move right here. Then as it gap out on earnings, the next day I realized it didn't, because it was quite extended, so I didn't buy the first day it gap out, because it's trend line. But then the next day I noticed it was able to find support higher volume and close near the top, so that's when I added position there, sold some here to take some little bit of profit. As you can see, pull back and then add more here on the bounce, and then here's where it got a little bit extended, took some profit there, and then it really fell right here on this day right here, and that's when I got out. Right, and education stock. This one has a really severe pullback in October, and this gap out on earnings really moved. I didn't buy on that day, but the next day it followed through on high volume again. So I got in on that second day instead. And as this guy moved up, you can see it never wanted to come down to the 10-day. And so on the pullback, I add some. Here, I don't even think, it almost near touch it. I added here again. Here it looked a little bit extended, so I took some profit. Here I added again. And then here it was the day that broke it. Right there. Broke along that line right there. So that's when I sold most of it, all of it. And looks like it's been holding really well recently. So we'll see. Again, education stock seems to be moving, so we'll see. The software enterprise. This one also took a long time to break out right here. I missed the reversal, but the next day it followed through. I took my first buy there, and then right away that day it gap up. It moved so much, I had to lock in some profit, and then after a couple of days it started to pull back, and then on the bounce here I add in position. Here's where it got really extended, and I took some profit there. And right here I added position, but then yeah, I think in the morning it tripped it, but then I bought it back because I give a really tight stop here. And then here's another day of bounce, and I add more. And then here was the day where it sank below this support line here on the 10-day moving average, and that's when I got out. And so far it looks like it's building a pretty good base here. Looks healthy. And so this was Delta Transportation Airline. A lot of the airline stocks did really well. I think Alaska Airline was one, but I missed that one. However, I got this one, so I'm really happy I got this one. Broke out nicely here on a nice cup with handle pattern. Here's my first buy. It pulls back right here slightly. Look at how nice it traded so tight right here. And then as it comes to 10-day bounce, and that's my second buy. And then look at this, it moves out and then it starts to trade tightly again, and then bounce on the 10-day again. I add another position there. And then as it goes up here, it's starting to lose momentum here, and I think I got shaken out right here. And then I buy back on the reversal right there. And then here's where again it went to new high, but it reversed. That's not good. You see how it makes new high right here, and it reversed. And then that's usually a bad sign, and that's like a bull trap, right? It traps you thinking that it's making a new high. So that's something we don't want to see in the next week or two. If stock starts to go back to the, this guy pull back. Let me refresh this. The stock pulls back, goes sideways, and then it starts to bounce, make new high, and then it fell. That's usually what happens when it fell. It goes down much lower. So anyhow, something but this one I traded pretty good. Up again in electrical power equipment group, Worth Holdings here have done really well. However, it's a little bit more volatile than I would like. But anyhow, so here's the base building right here. I bought on the first breakout on this trend line, above this trend line, um, and then right away it doesn't look like it here, but I took some profit right here, and then I added more after it reversed. Then here's where I sold a little bit, and then here's where I got out, and then it gives another opportunity on this pullback right here, and bought some more. This one almost tripped my short stop right here, but it didn't, so got really lucky there, and then it bounced pretty strong. Pulls back right here, and then add position here again on this reversal on the next day bounce of the 10-day, and then as it comes to here, it looks a little bit extended. I sold some, and then the next day you can see it just plummet right here, and then I try again and it fell. You see right there. It's wanting to move again. Celestica CLS also in the electrical area. So this is a really nice breakout right here. Nice cuff handle right here. Broke out on the gap out on the earnings. So that's my first position. Here it pulled back slightly. I think I put my stop too tight that day and I got shaken out, but I bought it back luckily. So this is something again, when you get shaken out or decide to sell, if it has a good movement at the beginning, like keep watching them, and then it move up really fast right here, and then I see that it's extended. I took some profit there, and then as it moves back down and bounce right here on the reversal, I add position, and then it starts to get a little bit more choppy here. I got shaken out right here, I bought back in, and I got shaken out again. So then it just see more choppy action now. I want to talk about Citigroup. So this is like around October, and it start to bounce right here. Um, Although this looks really choppy, but this bounce decided to get in right here. Sorry, but even then it was shaky. So I had the initial position, and then it went up here, took my locked in some profit there, and then right here it's trading really tight, and then on the bounce I add position here, and then here on the bounce again I add position there, and then right here it's starting to lose some momentum. That's when I sold. So this is square or block, and it has a nice breakout here, but this breakout actually fell. You can see it pull back right here, and um, and then the next day it actually bounced pretty hard. Like it actually this one. So let me refresh. This is actually a reversal day, and then the next day it followed through. That's when I have my first position, and then after 2 days it extended quite a bit, took in some profit. On this bounce I added position. On this pullback, I think I added some position as well. And then here on the bounce I added some position, and then here I also add position, and then finally it just losing momentum here, and so I go out right here. Talk about is Netflix. So here's the breakout right here. It moves up really slowly, and then it kind of doesn't have much power, and I have my stops too tight. But that's a good thing in this case because it actually went down to the day right here. Then the next day it gap out on earnings, and that was the day I add a position again, have my first add new position. And then here we're trading really tight around the 10-day, and I add my next position. And I wasn't sure if this was going to work out, but it did work out. And look at this run right here. And then here is another bounce of the 10-day, I add another position. And then we see this big reversal here. I think that's when I logged in some profit. And then here it's shaking me out. I think it just went below that red day stop, just like low, just really little. And but then I bought it back in because I was shaken out during the early in the day, and then I bought it back in. And then here's where another bounce right here, and then finally top on this day right here. So right now it looks okay. It's losing momentum. So we'll see. So this is ALAB, Astera Labs, in the semiconductor fabless area. This one is a really long base out of the IPO, and it didn't move until here. Really, this was trading really tight. So if you follow this dot, you can find me, but I wasn't following it at that time. And here's the gap up, and on the pullback right here, it found support at the 10-day, and then I added on the second day. It moves out here, extended a little bit, locked in some little profit, and however this didn't work out, and I got shaken out here again because my stop was too tight. Then it's starting to find support at the 10-day, and then it bounce right here, and then I add my next position, and then it moves up nicely to right here, and that's where I got out, logging some profit, and then the next day we can. But then this continued to make new high here after that, and now we have bounced in the new year so far after this pullback. So we'll see if this will work. But this one looks starting to look a little bit extended, even though it came back here. It didn't really test this low, so that's one thing I'm worried about. That, and I prefer stocks that test their most recent low on the pullback, just because. But in this case, it could be think because of this reversal, it could be considered that maybe there's just not much sellers, right? And there's way more buyers than sellers, so it could work still. And the other thing is if looking at the moving average, it defines support at 21 day, which it hasn't really hit for a long time. Like this was the last time it hit 21 day. So maybe that's okay, and this could be a leader, right? Continue to be a leader. So this is Kindrill Holdings in the software enterprise. It has a really nice base, and then this handle was so tight. I started buying even before the handle was formed because it was still early in this gap up right here within the base. And then on the pullback right here on the bounce, I add more, and then the next day it really moved on the breakout, and I took locked in some profit right there, and then here I lock in more profit, and here is where I sold probably just the tight. I moved the stop more tight and it hit it, and then on this next day it bounced and I bought back in, and unfortunately it didn't really work, uh, and it just kind of shaking around here. So now it has started to bounce again. Like I said, this new year it has started. Look at this volume, incredible volume. So it could work again. We'll see. Some of the better trades I have in recent months that I can remember. Unfortunately, I didn't track a lot of the buys and sells on the chart before this. So the first half of the year I didn't do that as well, at least not on the daily chart. So that's something I will keep on doing just because it's why when you do that, you are able to study where your entry and exit points are and learn from them and see where you usually, whether you are capturing most of the gains if you had the right stocks and learn from it, or if you are buying the stock and it fell, like what was it that why you didn't get out and stuff like that. So generally, I have a very tight stop within 5 to 7% usually. Occasionally, on a more volatile stock, I might have it to 10%, but most of them are between 5 and 7%. That's generally like again, there's no hard rule for me. I look at the chart and determine where the last support level is. The other thing I want to talk about is something that I also did. I'm trying to do better. Is again, it's related to don't trade with fear. Manage your risk properly. That way, one of the things I did really bad in the past was like I would position in slowly. Now, the problem with that is when you have the right start and you position in like, let's say a quarter of your intentional position. Well, if we move up, third day, fourth day, now you get into a point where you don't have much position. So as it moves, you're buying at a higher price, and if it fell, now you actually suffer more because you have more positions at a higher price. So instead of doing that, like, I want to position in, my full position as early as possible, like within the 2 days usually, or 3 days maximum of the breakout. That way I'm not chasing the stock, right, as it goes to new high too fast. Especially if it's a really strong market. Now, but in cases where it's not a strong market, and it fell after let's say 4 days of run and it completely fell, like it comes back all the way to the bottom, then you're giving back quite a bit of loss. You're having a big loss there. So that's something I want to do better. Again, don't trade with fear. That's I think that's the key because we tend to have emotions kick in. Just manage your risk, figure out where your entry and exit point is, and then trying to overcome this. I think this is something that's very important for me to improve my overall performance. So if you like this video, please like and subscribe, and then we'll have more videos coming out. Thank you for watching this. Good luck to everybody in the new year, and happy trading.